Hello everyone and welcome to our weekly global market outlook. I'm Tolga. It has been another dramatic week for financial markets with the S&P 500 extending its losing streak, the NASDAQ officially hitting correction territory and renewed trade tensions driving volatility in stocks, bonds and currencies. Looking ahead, the coming week promises critical economic data including US inflation figures and another round of central bank decisions that may influence the global trading landscape. Whether you are a finance professional or an avid market enthusiast, this update will brief you on last week's key developments and pinpoint the events likely to impact your investment decisions in the days ahead. What happened last week? Trade tensions weigh on the market as the S&P 500 fell for the third week in a row and posted its steepest weekly decline since last September. The index recorded a minus 3.1% total return, faring slightly better than the NASDAQ's minus 3.4% result, while the Dow fell 2.3%. The NASDAQ entered a correction on Thursday as sharp declines for many of its technology stocks left the index more than 10% below a high rate reached a couple weeks earlier, as well as its record level set nearly 3 months ago. While the S&P 500 and Dow were also down sharply from their recent peaks, those indexes didn't fall below the 10% correction threshold. Trade conflicts buffeted financial markets as the United States imposed 25% tariffs on most goods from Canada and Mexico on Tuesday, while also boosting existing duties on Chinese imports. The three key US trading partners then retaliated with their own tariffs, leading US officials to pull back duties on some Canadian and Mexican goods for a month, including automobiles. Although investor sentiment remained cautious, amid fears that prolonged tariff battles could dampen global growth. February's gain of 151,000 jobs came in slightly below most analysts' expectations, but marked a modest increase from the previous month's adjusted figure of 125,000. Nevertheless, growth has recently been moderating overall, as monthly jobs gains averaged 168,000 over the past 12 months. A measure of the US dollar's value relative to a basket of other major currencies was down 2.4% for the week as of Friday afternoon, the dollar's biggest weekly decline since November 2022. In contrast, the euro was posting its biggest weekly gain versus the dollar since 2009 after European governments announced plans for increased stimulus spending. An index of US large-cap growth stocks lagged its value counterpart by a wide margin, extending the value equity styles year-to-date comeback following growth's market leadership in 2024. The growth index closed down 3.9% for the week on a total return basis, while the value index fell 2.4%. European stocks climbed on Thursday after the European Central Bank approved a rate cut for its sixth policy meeting in a row. The move came in response to recently weak European economic growth and rising geopolitical tensions, which have prompted plans to increase spending on infrastructure and defense. New data revealed that Chinese consumer price turned negative in February, posting a minus 0.7% year-on-year change, its first deflation reading since January 2024. This shift, partly driven by waning seasonal demand after the Spring Festival, underscores China's slower economic momentum. Looking forward, attention will gravitate to next Wednesday's US inflation data. The previous report showed core CPI at a 3.3% annual rate, fueling speculation about whether tariffs might soon push inflation even higher. Alongside that, traders will also watch for the federal budget statement, the producer price index on Thursday, and the preliminary University of Michigan consumer sentiment figure on Friday. Any surprising development in these reports could shift expectations around monetary policy, especially with the Fed's next meeting on March 18-19. Here's a day-by-day snapshot of what to watch this week and how it might affect the markets. Monday, no major US releases scheduled. Investors will keep an eye on global sentiment, especially any developments in trade negotiations and overnight data from Asia. Tuesday, US shows job openings, a pulse check on US labor market demand. High vacancies could signal continued hiring strength despite slower non-farm payroll gains. Small Business Optimism Index, a potential insight into how tariffs and cost pressures are affecting Main Street sentiment. Wednesday, it is US CPI Day, the marquee data release for the week. Markets are watching closely to see if tariffs have begun filtering into consumer prices. Federal budget statement could shed light on government spending on fiscal positioning. Bank of Canada rate decision expected to cut by another 25 basis points as growth concerns and tariffs on Canadian exports weigh on the economic outlook. Thursday, US Producer Price Index and unemployment claims data will be released. Producer costs can hint at future consumer inflation. Jobless claims remain an important barometer for labor market health. Friday, University of Michigan Consumer Sentiment Preliminary. Consumer confidence often shapes spending behaviors, so a surprise here can rattle or rally the markets. On the global front, Chinese two sessions will conclude on Tuesday, and investors hope for clarity regarding possible fiscal or monetary stimulus to offset trade pressures and recent deflationary signs. In Europe, Germany and the UK will update industrial production, GDP growth, and trade balance figures. The data will provide key insights into whether manufacturing has started to rebound in the euro area and whether the UK is managing to eke out any post-holiday growth. Meanwhile, the ECB's latest rate cut underscores the region's challenges as domestic inflation remains relatively high while overall growth looks fragile. Market participants will also keep a close watch on ongoing tariff news. Heightened tensions between the US and multiple trade partners are adding a significant layer of uncertainty, making risk assets vulnerable to any new developments. Finally, we may see more clarity around the path of US government funding as lawmakers race to avoid a shutdown. Failure to pass legislation by mid-March could inject a new wave of volatility into financial markets. Overall, last week's steep declines across equity indices underscores the market's fragility in the face of intensifying trade disputes, shifting interest rate expectations, and moderate global economic indicators. This coming week offers pivotal data, particularly US inflation numbers, the Bank of Canada's rate decision, and European industrial and GDP updates that may help investors gauge whether growth can hold steady or if trade-driven headwinds will deepen. Key takeaways: any sign of escalation or relief on tariffs could quickly shift market sentiment. Wednesday's US CPI release might be a turning point for monetary policy expectations. The Bank of Canada's rate decision and ongoing global central bank commentary will keep traders on their toes. Keep an eye on China as developments there remain crucial, given its influence on global growth and commodity demand. Thanks for joining me for this week's Outlook. If you found this update helpful, please give it a thumbs up, share your thoughts in the comments, and subscribe to stay in the loop on all our future market insights. Until next time, I'm wishing you a successful and informed trading week.